Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A second bearish black crow yesterday following the previous session's immediate countering bearish dark cloud cover pattern. Prices dipped once more down towards the 106.66 to 106.68 zone, but failed to reach it, though it was the lowest close since May Day. Topside, we have the capping action of the bright red upper tide, currently at 107.27, of the late December 2023 to early March 2024 bearish shift pitchfork, as well as the April 2020 low at 107.25. Further up, the moving averages are still in a tight band between 107.55 to 107.92. Overall, the market is still outside and below the mid-April to late June ascending expanding wedge pattern. This ascending wedge pattern is quite interesting as it attempted being a transition pattern for a move out and up out of the bright red bearish shift pitchfork, but ended up getting sucked into the main pattern instead. Admittedly, the downside primary target for a break lower out of this wedge pattern, well, that's already been achieved, and it leaves a much harder secondary target X below down at 106 even. So far today, a small reactionary move back up, but not that far. I continue keeping a close eye on that hidden support in the 106.68 to 106.66 zone. Cable, aka sterling against the US dollar. A bearish engulfing pattern yesterday, which wasn't that hard to do, as the previous session was an indecisive doji cross. What was interesting was how far the drop penetrated into a wide congestion band between about 125.64 up to 126.72. Now prices punched down and closed below the congestion at 126.72. The mauve highlighted flatlining medium moving average, currently 126.40, and the slowly rising short medium moving average, currently 126.24, closing right on this last one. Below, we now have the 50% Fibonacci line of the July to October 2023 move at 125.90, and the slowly rising long moving average, currently 125.64. Overall, late 2 weeks ago, prices broke down and out from the dark blue highlighted April to early June bull channel, which I am now starting to look at as an ascending wedge pattern. Thus, a primary target X for this is in the 125.65 zone, with a secondary hard to reach target X1 down in the 121.80 zone. Now, so far today, a dip to make a new recent low, but the pullback up afterwards over the green short medium moving average and now challenging the mauve medium moving average from below. Euro sterling. A counter to counter bullish harami and bullish double yesterday, if only just on both of these. This coming after the previous session's immediate countering bearish engulfing pattern. The market was once again capped by the April 2021 low at 84.70. Overall, the last 2 to 3 weeks have been a reactionary move back up, from the market reaching its potential down at 84.30 from a May to June based bearish halfway hesitation. It is still open as to whether or not the action, the more recent action, is forming another bearish halfway hesitation. Now, so far today, a lower open, but a small attempt higher. But the capping action of the April 2021 low 84.70 is still having an impact on this market. Further up, we have congestion from late May and early June that formed the recent bearish halfway hesitation, and that's between roughly 85 even to 85.25. US dollar against the Japanese yen. A bullish closing white Marubozu yesterday after the previous couple of days hanging men patterns. The move up broke new ground, with the market punching up through and closing over the April high at 160.04, as well as the April 1990 high at 160.34. We are now up into highs not seen since December 1986. Now there are a lot of gaps up here from back between the April 1990 high at 160.04 and a December 1986 high at 163.36. Below we now have this congestion zone between 159.61 to 160.34, whilst above we have the next dark blue highlighted tine, and that's the middle tine. And that's currently at 161.51. That's of the recent March to May bullish shift pitch walk. And above this is the purple highlighted middle tine, currently 162.31 of the older February 2022 to January 2023 move. That's a bullish shift pitch walk, that one. So far today, we're actually moved back down today from the open, but being held by the congestion between 159.61 to 160.34. US dollar CNH, the offshore Chinese yuan. A second bullish white soldier yesterday after the previous sessions combined key reversal down and bearish engulfing pattern. It was a new high and a high close, one not seen since November of last year. The long suspected rise in this market is finally happening, though remarkably slowly. Below we have the previously mentioned congestion zone between 724 to 727, within which sits the rising short medium moving average, currently at 725.41, and the dark blue highlighted upper trend line extension to the January to April ascending triangle, currently 724.15, and now the rising medium moving average, currently at 724.03. Now looking topside, well, the next topside resistance of note is the mid-November 2023 high at 731.06, which ties in with some earlier congestion at 731 even area. As a side note, I'm very tempted to look at the action since mid-March to date as a possible reverse head and shoulders bottom type. I've repeated this many days now, but for now I'm resisting that temptation, but I may give in. So far today, holding around or just under yesterday's close, a little weaker right now. US dollar against the Mexican peso. A second bullish white soldier yesterday and a follow-on to the previous session's bullish harami. Below we now have the steep dark blue highlighted middle time, currently at 18.14.48 of the early April to mid-May bullish Andrews pitchfork. Meanwhile above, we have the February 2020 low at 18.51.71, which aided the capping action in early June. It's time now to consider what the next pattern will be, and for this I would like once more to put the following idea in front of you. We have the possibility of looking at the action from 2022 to date as potentially a huge double bottom pattern. We are now, after the rise during May and now into June, and even after the recent falls, relatively close to the neckline area in the big scheme of things of this pattern of around the February 2020 low at 18.51.71. As this is something I saw on my monthly charts, I would appreciate at the very least consecutive monthly closes over this level to confirm such a long-term potential move higher. Thus, with only today and tomorrow to go until the end of June, let's keep an eye on where the prices close on the 28th of June. So far today, a small dip from yesterday's close, but still well within yesterday's range.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.